All right, everybody, welcome back to another episode here on the Dividend Dogo show on YouTube, and I am bringing you into the weekly portfolio review. We're going to be taking a look at the M1 Finance portfolio and looking at how we did over the course of the week and what was going on across the board with the market. Now, as many of you who are in the investment area and, dealing with stocks all the time throughout the week, you'd notice that we had a pretty massive shift this past week. Even with like good fundamental calls, stocks were dropping, stuff like that. So we had a little bit of the beginnings of a pullback, and I just want to reiterate a couple things. Make sure that you're keeping in perspective the overall long-term growth of the portfolio. You can see that we peaked at the beginning of this week, and then it started to come down in value. Now, if we get a spike here where this drops down, you just got to stay focused and continue to keep investing, because overall the goal is to build wealth, and you do that by purchasing shares of the companies that you want to own over time, and then collecting the rewards either via dividends or by share appreciation and growth over the long term. This isn't a rabbit race where we are, instantly getting rich quick. This is long-term investing and holding. So let's get into the 1 week here. And I'm going to show you exactly what we're doing here. This was the total for the week. First off, we did earn $55 in dividends. That looks very, very tiny compared to the negative market gain. We had a pullback of about 4.35% to the portfolio this week. That is $31,772.89 in total. That's pretty heavy. So let's go look at some of these sectors. Let's look at healthcare here. We're at about 2.8% down. Consumer was 2.6% down. Utilities was down 3.74%. And the big whopper, one of them here, is the finance side. Now, last week I did a big buy of Ally Financial, which has gone down 10% in that week. Does that really bug me that much? It's kind of one of those things that, like, if I had just waited a week, you second guess yourself, you run circles around yourself and your thoughts. Not really. This is going to pay me almost $800 a year in dividends for this position, so I'm excited for this to grow, and the capital gains. I liked where the position was at before, so buying it now at a 10% discount is just going to be something fantastic to do. I do kind of want to pick up a few more shares, but as you can see, overall the finance side was hit pretty hard, almost every single one. Bank of OZK held real strong this week. I'm going to be curious to see how they hold out over the next couple weeks if we do continue this market downtrend. But this is really the first red week that we've had in quite a while. I honestly can't remember. I think maybe October, November we had a red week, but it felt like Christmas was just a dream because things just kept going up. Now, Como Money was down 5%. And that's going to bring me into where I did my buy for the week this week. Now, it is a much smaller buy than you're probably used to seeing if you just started tuning into the channel. I don't do large lump sum buys all the time. I try to dollar cost average in every single week buying something. So I'm going to bring you in, showing you we have some deposits going into the account. Some of this is into M1 Spend, which is the savings account. And then there's another deposit coming into the brokerage account on Monday or Tuesday that will hit. That's just from my other online savings account. But the one buy that we had this week was a combination of a little bit of dividends and a little bit of cash, and that was into SCHD. Buying SCHD when the share price is going down is just a no-brainer. Easy for me to just throw money into it, not even worry about looking at the evaluation of anything in the portfolio, to be honest. Just buy and acquire more shares, especially if we do see a large pullback overall. I want this to be a cornerstone of the portfolio, probably $100,000 to $200,000 in the long run, just in SCHD. So it's pretty easy to just pick up shares, especially when you're seeing discounts of, like in this case, 5%. Tech was down about 5.7% overall. That's, just for me, that's just Microsoft and Apple. Microsoft having some pretty amazing news about buying Activision Blizzard for billions and billions of dollars. It's absolutely crazy to me that the company is worth $60 billion to them. However, they do print money, and adding billions of dollars to the cash flow balance sheets going forward every year and wanting to build a heavier gaming side. They've been scooping up studios for the past couple years, like Obsidian, In Exile. Bethesda was absolutely massive news when that happened. So, I mean, they're just going bigger on scale, and they're not even the largest player in the gaming sector. So, they've still got to compete with some big boys like Tencent. So overall, I hope that the deal actually does go through. I think it's positive. I was a World of Warcraft player. I loved StarCraft and Diablo and Call of Duty. Lots of different games on the Activision side. Tony Hawk. So I'm excited to see what Microsoft will get those franchises and do with those franchises that they've got. So industrials definitely was down the almost the lowest for the portfolio overall as far as the pullback went. So Lockheed didn't really pull back much at all for the week. The Caterpillar came down 6, Raytheon just about 5 overall, not too bad. And then monthly dividend stocks, the owner's rewards pie is mainly just for the credit card rewards, which I believe we're going to actually hit the cap this month and get $200 into the portfolio from the M1 credit card. BST was down 11%. It is very tech focused and tech heavy. So BST is going to be one of those that I'm going to be looking to add more to, especially if it's going to keep going down. Just looking at my position overall, my average share price now is at 44.52. So it is now below my total price. For my average share price, I will definitely be looking at this as one that I'm going to be considering adding to. Now, the yield is a little deceptive because they just had that massive payout in December, but BST is one of those that I'll look to bumping up a little bit. But mainly, I'm going to keep looking at Ally Bank here and watching that. If it comes down another 5-10% this next week, I'm going to be ecstatic to put some of this capital to work in several stocks over the course of the next couple weeks. I'm probably not going to deposit and do all of the buys all at once, because if we really are in a correction mode, this could go on for several weeks of having red weeks. And I feel that just dollar costing in a little bit to the stocks that you want to hold over a couple weeks time frame and see how the market's reacting is probably the better play, which is probably what I should have done last week with the 30K Ally buy. I should have just bought in a little bit, seen how things went, and then continued to buy chunks, in a little bit lower scale. So overall, just keep that in mind. Stay focused on what you're wanting to buy and what you're looking at overall to purchase and what you want to build up in your portfolio. I realize I didn't really go into the consumer pie much, but I do want to point out that Lowe's was down 7%. That's a position that I've wanted to add more to. Target was barely down at all. Pepsi's barely down at all. Mo was barely down at all. Home Depot was down pretty significantly, which this is a stock that I'm definitely will keep on my radar to watch. Costco being down about 4%. That's another one that I've been trying to buy up, and I want to build this position up into the 20K range, just like Home Depot. So these are stocks that I'm going to have on my radar and be watching to see what I want to add to, especially if we do get a good chunky correction of 20-30%. That's the time you want to build up those stocks that are just fundamentally solid. This correction, nothing's really changed with Costco. They're still printing money. I ran to Home Depot to get some housing project stuff this week, and just as busy as it always is. Not much is really changing in the outside world here. People are still going to be doing projects to clean up their houses and fix things. Everyone's still going to Costco for shopping and groceries. If anything, people are buying more in bulk now and meal prepping and stuff like that. So overall, I'm pretty excited. The end of the month is coming. We're in the last week for January. I've got a bunch of dividends that are going to roll into the portfolio. I believe it's BST and JPM roll in on the 31st. So that's going to be over $200 in dividends coming in just a couple days, mid this week. And then I've got a lot to look forward to with February. A lot of things already passed their ex-dividend date for February. So those are locking in, those dividends are coming in. So, I'm going to be watching this week because Ally does go to its ex-dividend date on the 31st of January. So I want to potentially pick up a few more shares if it does keep going down in price. I'm going to be excited to add more shares at a cheaper price. And, that's exciting for February. So we got a bunch of stuff coming in. We got AbbVie, Lowe's, Caterpillar, Apple, Ally, Costco, and BST, which will all be paying in February. So my order of operations for buying this next week is probably going to be looking at Ally again really closely, watching BST, and watching Costco. All three of those stocks have an ex-dividend coming up. The ex-dividend is going to roll through. And, adding a few more shares for the beginning of the year means that, we're going to get 4 full payouts for all of those throughout the course of the year this year. And it's exciting to see those things come down a little bit in price because almost everything has been super expensive. So I do want to thank you all for watching. I hope that everyone is watching their stocks that they really want to purchase and buy, and staying focused overall on the end game goal for whatever your portfolio structure is going to be. In my case, it is all about earning these dividends and getting them in over time, building up these positions and adding more to the next forward 12-month income, and consistently just keep growing that. Right now we're sitting at about a 3% average yield for the portfolio, and we're slated to earn $21,137 if I was to deposit nothing else and no more buying of stocks, and stocks didn't give any raises for this year. So that's money that's going to come into this portfolio if we are having a downturn for the rest of the year. Say the year is negative 15%. That means I'm going to get to deploy that capital and buy more shares of the companies that I want to buy and hold for the long run. And I'm not as focused on market gain. It's nice to see it all be in the green all the time, but I really want to be focused more on the earned dividend income and that forward next 12-month income going up. So let's keep going forward. All of you investors, make sure that you've got some savings. Pick up a side hustle if you have to. Get extra income coming in while these stocks are going down so that you can buy more shares, because the stock market is a roller coaster that rolls up and down, and you have to be ready. Every week can't be a gloriously new hitting all-time highs week. You've got to have these divots and these dips in the chart, and things will come back and things will be corrected over time, and you need to be prepared to be buying extra shares of whatever it is that you want to buy during that time frame. So thank you very much for watching. I hope that you found this insightful and interesting, and I hope overall you will enjoy the fruits of your labors and buying stocks at discounts over the next couple weeks, hopefully. So thank you very much for watching. Have a great weekend, and I will see you for another video here very soon.